Hello guys, welcome to the channel. As you can see on this chart, there's a very important demand zone marked here, which is the yellow box, along with a few key levels I've drawn. This is BTC daily charts, and the short term, a really interesting trade setup is starting to form for anyone looking to take advantage of opportunities in the futures market. In this video, I'll break down the origin of this demand zone, explain why it still matters today, and then show you how you can safely approach trading around this area using the current market structure. But before we dive deeper into the analysis, a quick word from our sponsor. Right now, MEXC is offering an exclusive bonus for viewers of this channel. All you need to do is scan the QR code on the screen, sign up, and you can be able to claim your reward instantly. You can also find the sign up link in the description below this video. Simply click the link and follow the steps to get started. Spots are limited, so make sure you take advantage of the offer while it's still available. Alright, with that said, let's jump back to the chart and break everything down step by step. So we are getting started with the origin of this box. How and why did you draw this box on the chart? This box is a strong demand zone before it was flipped into a supply zone right now. So but why does this box really matter? Now if you go up, you see that if you go back and zoom in, you see how we drew this box, how we got this box on our chart in the first place. This was a strong imbalance from this zone all the way to this zone, this candlestick. This was a strong buying pressure happening around November 2024. Whales were heavily accumulating BTC at this price point, and the market revisited the zone, respected it, also here respected it. Now for us to get more insights together with this very box and determine what the market is potentially going to do next in our current date, we need to add more confluence to this very chart. As you can see on this chart, we have the 50 moving average. Whenever the price of an asset is below the 50 moving average, it's bearish. Above it is bullish. Just like that. If you still go back, you still see the same thing playing out, especially on big time frames, or literally works on every time frame though, but the bigger time frame makes it clearer and crisp to understand. Now let's see what the momentum is telling us. This is going to be simple, and here is where everything clicks and becomes even more interesting, so pay close attention. By the way, if you have not subscribed to this channel, please do so to see more of this type of content. All right, now let's go back to business. You see, BTC made this move to the downside, right? And then you revisited this zone. This zone is around the 24 or 23 point something zone mark of the RSI. Now when market visited it, it was, of course, this line is below the 50 moving average. When the RSI goes below the 50 zone, it means that the market is bearish. Same thing happens with price. And when they both match or tally, it means that that direction is sure to play out. Without bugging us with too many analysis, this is the first dip into this point. This is the price and this is the zone. A market went close to the 50. If you notice, the RSI crossed the 50 mark, but the mark was the moving average was below the 50 zone. So we got rejected close to the 50. That is how we got this line. And if you notice, we got sort of double top here, though it didn't play out very well, but this is more like a double top. Now, when this rejection happened, the market respected this price point. This is the price zone here. This was the previous swing low, right? So the market got rejected here and respected this price point. It played out very clear at this point. It respected it before going up. Now look at it again here. We got this market dipping into this area and market built up momentum. Take note that we got top 1, also got top 2. These tops were below the 50 moving average. And we also got support. This was a support area where the market kind of picked up to this point. Market revisited it, respected this zone. When this rejection happened for top 1 and top 2, which is the second top here, we got this rejection and it seated right at this point. You see? So we tallied with the previous support area before we made this rally to the upside. If you still come here to the current state, we see that BTC dipped into even below the 23 mark of the RSI. Now we are very close to the 50 moving average. Again, first hit, the first top here, we got rejected. Second top here, we are most likely going to get rejected. Of course, based on what the raw data or chart is telling us from this analysis. Now, what do we expect and how exactly should we trade this? First thing here is the support area where we are finding support. As you can see, the market rejected. This is more like a mini demand point, all right, on the daily chart. And since the market respected it, we may get a rejection and see revisiting this zone, probably zone or this point or this point. Any of these may be revisited before we make another rally to the upside or to the downside. But basically, we expect a rejection within the zone. So how exactly do we play this? How exactly do we trade this? Now, this is what we're going to do. To trade this, we need to wait for the market to visit this zone. Market should tap into this supply zone. Not longer a demand now, it's a supply zone. If it taps into it, we want to see rejection for a very good trade setup. For example, this is something that happened here. We got this market tapping into the zone and then it got rejected. We set the stop loss above this point, hold it until it reaches the 50 moving average. So same thing here. If we get a rejection here, something engulfing, formation setup, we should take the trade, set it within the 50 moving average mark. We can take our first profit and then decide what to do next. So it is quite straightforward and simple. I believe we understood everything that was explained, and then we can take advantage of this very trade setup on the futures market, maybe on MEX, because there are trading fees. Sometimes they give you zero trading fee. Sometimes the trading fees are very low and they are actually giving out a lot of bonuses for those who are signing up for the first time with the link provided below this video. So this is a very good trade setup and we should not miss out from this opportunity. I'll keep us posted. But meanwhile, do not forget to subscribe to this channel so that when I drop the follow-up for this very trade setup, you wouldn't miss out from it. So thank you very much guys for watching. See you in my next video. Share, like, subscribe and comment. Bye bye.